Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm with KKM Financial. Well, we are looking at a VIX cash pushing up to 21.5 currently, which is a 1 month high. Intraday high of just shy of 22, so VIX cash pushing up to the highest levels in the month as the markets are realizing some continued downside this week, and couple that with the bond market realizing some selling pressure as well, with interest rates pushing up to the highest level in a month. And I think that's why we're seeing some uncertainty coming back into the market and increasing demand for options. Looking at realized volatility, 10-day realized volatility shifting higher week over week from 15.5 to 18.5, so up 3 vol points in 10-day realized volatility. However, 30-day realized volatility remains unchanged week over week, right around 17. At the money straddle in the SPX, looking 30 days out, implied vol level of 19.5 this week. That's up 3.5 vol points week over week. So we are seeing demand picking up for at the money options in the SPX. And looking at the VIX futures, we're also seeing them moving higher, continuing to move higher. Last week we pointed that out, and certainly that continues this week. With the VIX cash right around 21.5, we're looking at that front month future pretty much right at parity or just higher as we move into expiration next week. We are seeing the roll market narrow by 10 cents, so there's 90 cents of positive roll between February and March. And the term structure in the futures is flattening quite a bit this week. Now, you look at May and June futures, they're basically flat, so you're seeing contango coming out of the middle of the curve. Looking at activity in the VIX options, a lot of action in at and out of the money puts and calls this week. February highlighted because we're moving into expiration week. 19 through 21 lines very active on the put side. Then on the call side, 21 through 24 lines active, highlighted by a big trade here today from the February complex to the March complex, it appears. February 23.30 call spread trades along with the March 24.30 call spread 40,000 times. Looking at next week, several things to influence the vol structure. A lot of data next week, inflation data highlighted by CPI, PPI, and retail sales. We also have Fed speak next week that influenced the market this week and will most likely continue to influence the market next week. And finally, expiration week next week also has to be priced into the vol structure.